Hey, welcome true scalpers, back to another live stream with the Mohawk Forex team. And yeah, today, as you can see, we're set up on US-30 already on our 5-minute time frame with our axe trading system. We're ready to go as we're going to tackle this building permits and housing starts month on month, year on year, coming up in about 10 minutes time. And then we've got the NY Open. In fact, we've got a little news before. Industrial production might do something before the Open. Then we've got the Open, and that's it today. So we already had some nice wins on the ZEW economic sentiment report for DAX. As you can see, we had a nice drop here from that news. That was a news event here, and we caught some of this. In fact, I just ended another sale just about 2-3 minutes ago on DAX using our 2 trend bars and our RSI to give me extra confirmation. So we've had a good day on DAX so far. We also had a nice win on our cable trade. As you can see there, there's a possible 36 pips today on that trade. We're setting up for the New York trade on it as well, as you can see. There's the line at the moment, so that we've set, just so everyone can see that. Still, we won't enter this trade until 30 minutes after the NY Open, so just going to post that into the group so everyone can follow that. And we've got Blueburn Garnet in the background as well. So we'll keep an eye on the market and if they print the news as well. Like I said, we've got about 7 minutes to go and we're going in on US-30. We're only trading with a small account today, about $700, smaller account. So we're only going to go a couple of positions on this. The minimum lot size is 1 on IC markets, which gives me about 10 cents a pip. So, you know, you've just got to trade within the margin. You need 140 to trade this, so we've got 600, so we've got a bit of leeway, and we're hoping obviously this will go to a take profit pretty much straight away on the release of the news. Pretty much straight away on the release of the news. So back to the 30. You can see we had a nice pull up at midday. Two green trend bars and a nice green RSI is what we like. So that could have been a nice entry even though it was below our baseline. Engineers from Williams are using their knowledge from 9 relationships, working with company Air. Here's the entries I look for as the RSI crosses into the neutral. That's an aggressive entry. When it leaves the neutral, a secondary entry, and then when it goes overbought the first one, again a third entry. As long as the excuse me, as long as the two trend bars are in that direction, that's the kind of entries I look for. All on the 5 minutes. Got a NAS as well set up at the moment, ranging as you'd expect when you see these trend bars in and out. Again, we could have a potential aggressive buy here when it came back into the zone. That could have been an entry. And also when it left the zone, we could have had an entry. It came back in. Once taken a sell at that high level, and then we could have taken another buy there possibly. So we've got a supply demand zone here as well at the top, you can see. And we've got our parabolic SAR, we can put them on there to see if we need confirmation that we're still in an uptrend. But it's a range moment on NAS. That's why I'm focusing on US-30 for this news event. As you can see, again, a bit of a range. Looks like it wants to push down.
To grow your practice and make better use of your valuable time. The difference is
we'll just wait for this news and see if we get a matching set of trend bars. We've got 5 minutes to go. Again, the figures looking lower, 1.65 from 1.69, 1.54 from 1 point. So obviously we're expecting permits and starts to be down. Is it going to be better than that or worse than that? And as we're pre-market, pre-open, will the market go in reverse? So if it's good news, we're going to see a sell. If it's bad news, then we're going to see a rise. And that's what we're looking for.
Your global business authority. This month, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the
Jackson Hole, and that'll be good. We'll be doing a live stream while the Jackson Hole's on as well.
Bloomberg surveillance is live as policymakers and financial insiders discuss
that's going to be interesting.
And solutions that keep the world's money moving. Coverage starts August 25th, only on Bloomberg Television and Radio.
Brilliant.
The thing about corrections, we've already had a sharp one this year. Corrections kind of love company. They come in pairs, they come in bunches. You can go for many years without, then all of a sudden you get a few. I think we get one more this year. From there, I do think the S&P can rally to 4,100, 4,200 by the end of the year.
David Bianco there, the CIO for the Americas at DWS, looking for a retest of the lows of the year later this year, then ultimately a rally towards 4,100, 4,200 on the S&P. With Tom Keane and Lisa Brabitz, I'm Jonathan Ferro. Futures down not even 1/10%, just a little softer this Tuesday. On the NASDAQ, we're down 0.02%.
Gold as well has been in a range, so we're going to leave that alone. As you can see, this news might affect it.
On a 10-year, Tom, euro-dollar negative 0.25% at 101.
But usually when the RSI is in and out like this, changing a range is dangerous. It's just one of those micro scalp.
Billions of dollars in orders.
We want to see a decent move.
They go on to say the shoppers are buying more store brand goods.
1 minute to go.
Yes. And the headline we brought you a little bit earlier, I'll repeat again, and just in case you missed it, they're seeing more middle and high income shoppers. Tom, they're the kind of headlines you read when things are getting a little bit more tricky in this economy.
There's no question about it, and I should say there's a huge tradition of moving to private label when things get tough. I just did a quick scan on the internet, John, and you look at Great Puma mustard. We make a joke about it.
So we're logged in with our broker. Yep, we're good to go.
At Walmart and the equivalent at Whole Foods, fancy where Lisa shops, and it's $4.79.
You're going to shift, Tom, from whole paycheck
We're going to start the countdown. Good luck. Like I say, hopefully we get a sync on all the news results so they all go the same way. That's what you ideally want. But the main one is obviously the month on month, as it's an indication of inflation as well, of course.
We are thrilled to bring you Brian Nagel out of Wharton. He's with OPCO.
How far off it's going to be. Remember yesterday with the NY Empire, the prediction and the real result were way apart. We had a massive move. So we're going to get another one today. Here we go, 50 seconds. US-30 is gearing up.
Wins at retail in the next 18 months to 2 years.
RSI is in the neutral zone, ready to spring. We've got a mix indicator, so you know this is going to be all to do with the result.
I think I'll answer that one way, but we saw, I think, a very strong report from
probably be only to get away a couple of positions, to be honest with you, like the usual. I'm meant to do my usual 4 or 5 smaller account. That's what you've got to do. You've got to do.
I also tend to think, look, I think the athleisure category, you know, that's why
16 seconds, 20 seconds to go.
I think are very well positioned here. Then another category that I've been recommending for a while, which I think there's a lot of underlying strength at this point, is the auto parts category, and leading operators such as AutoZone and O'Reilly. I mean, the commonality across all these is they're healthy spaces with good underlying consumer.
Gone greens, moving up. We've got double red.
Really strong, highly functional, good operating companies.
Brian, let's stick with Home Depot for a second because
Can
you
I
really
sell?
pointed on that.
It's going to start to
if
sell.
You're so optimistic if it's doing so well. Why are the shares down more than 26%?
Got double red. Let's wait for this result
after the earnings report.
to pin up.
Sure. So
Yep,
look,
there you
I
go.
mean, there's no secret out there. There's a lot of market concerns.
So is it going to get a reverse? So we're going to get a reverse, or is it going to be a sell? Let's have a look. Let's wait for this move.
And if any of us take out our recessionary playbook, home
Got red and reds dropping down.
Victims, okay? And that's what the.
Let's see if we can get a couple of sells in before it pings back from the buy.
Conversations I have with our clients every day.
Managed to get 3 positions away.
Whether recession's coming, how severe it's going
Let's
to be.
see.
The market right now is very much continuing to take the view, despite a lot of signals otherwise.
There you go. It's going to print that result into the group.
That's what's happening with Home Depot.
So building permits was better.
Right now,
Housing starts were down.
You have that as a backdrop with the marketplace. If you look at Home Depot results today, okay, we can be nitpicky. Their traffic was weaker off of very strong results over the last couple of years. But I think the overall results are very strong and very unsuggestive of any type of economic downturn or recession. So you really have this argument going on in the marketplace.
Let's refresh Bloomberg and see if that does anything.
Tickmill, shaping the future of trading.
Now the question becomes,
there you
going
go.
forward, do we see a decline in hiring in construction, especially residential construction, that would bleed into those employment reports the Fed is watching? Housing completions are 1.1% above the June number, 3.5% better than last year. So there's still homes for sale. There's still homes being finished.
Hey, we've got $20 on that.
They're going to be starting as
Just nipped in
going forward.
and just grabbed.
Would expect in a good weather month like July.
3 cheeky sells.
No big market reaction here. Equity futures still down about 1/10%. Yield still up on the front end by 3 basis points. But TK, if there is a segment of this economy that this Fed can address, it is this one right here with interest rates.
Well, that's the point. And Mike McKee.
And there's the drop. There you go. Look at that. There it is.
The whole thing, because it's really not academic, but I noticed that the pullback
2 trend bars, RSI red. That is your indication to get in there.
Sequence over 20, 30, 40 years, unlike 07, which 08, 09, which was terrible. Is the thinking among economists that this is going to be terrible, like 07, 08, 09,
baseline,
or is it
100.
just a normal pullback that we're going to see?
Well,
10
the Fed is hoping
pips.
it's a normal pullback, and
Let's move this across so we can see if this is going to drop down anymore.
So you look to those first for a reaction when the
RSI is red.
We've
got red. So
and that's what's happening. We're seeing declining auto sales, and we're seeing declining housing starts and home sales. But the question of whether you go too far or not is kind of hard to say, because we don't know what the overall demand is, and as demographics play a big role into that, we have to keep an eye on where we are. The fact that we're
minus
still
10%, minus 1.3, so it's quite a way down. Housing starts. Building permits was up 200
concomitant industries, the side industries like Home Depot and their results today, still strong because people are still buying stuff. Less traffic as the construction numbers start to fade, but people are still got to fill those homes that have been constructed.
Mike, this is by design, isn't it? I mean, the Fed wants to see the housing market lose some of its steam and is okay with what they're seeing, even with the plunge that we saw in home builder sentiment, even with the cancellations of sales increasing. This is all
Again, if you want to put a marker on this, you could.
Yeah, and this is the
short from here. Your stop loss is going to be above there, and your take profit is going to be just before the 236.
How far, as Tom asked, does it go?
If it breaks our baseline,
like 2007, where not only the industry fell off a cliff, but when it restarted, they couldn't find construction workers because they went and found other jobs. And then the last couple of years, with immigration being curtailed, it was even harder to find construction workers. So now they're finally finding the workers, and the business is falling back. So we'll see what the overall impact on the economy is.
Hey, Mike, thank you. That's your housing starts data, down by 9.6%. Permits holding up, just negative 1.3% month over month. Tomorrow, we get some mortgage applications data. Then Mike McKee's going to break down retail sales for us, Tom, at 8:30 Eastern time.
We'll see it on housing, and of course, housing a movable feast. We'll have much more on that through the month of August. Right now, Gregory Dacko joins us, chief economist at EY Parthenon with Ernst & Young, of course, and we're thrilled he could join this morning. Greg, one of the great debates we're having here is an optimism seen out of part of J.P. Morgan this morning on inflation coming down faster. That buttresses up against your good analysis of a recession or lack thereof, because a recession needs to be persistent,
NAS
profound,
NAS got affected by it as well. Look,
Is our
could have took
inflation
a sell on NAS.
persistent,
That was also good.
profound, and pervasive?
Well, I think, Tom, we're in an environment.
Obviously, you wouldn't expect the German DAX to be affected by it. Pound dollar, not really.
Just talking about
it moved a little bit. It did drop.
We're in the 07, 08 type of environment. We have
the top there, but again, not worth it with a spread. You're talking only 7, 6, 7 pips.
At 20-year lows. And in terms of excess savings, those are good conditions
and
entering
gold
this type of environment where there will be a
dropped down and bounced off that low.
Interest rate sensitive sectors. That is, as we were saying, what the Fed intends to do. It intends to cool demand. The housing sector alone is not enough. It wants to cool the broader set of indicators in terms of demand and hope that inflation follows suit. So I would expect to see persistence in inflation, but I think the key theme on the inflation front is going to be that divergence.
So again, it's an aggressive entry from the sell here. Look, as it came into the neutral zone, you could have taken a sell there. It was red.
But core inflation is likely to
trend bar was red as well, so you could have got in on here early and then rode it down.
Sheets, and you brought us some aggregate numbers. When you look at low income, middle income, and high income households, is the same true from one group to the other?
Let's see if it's going to range a little bit now. Remember, we've got some news again in 15 minutes, to half an hour, sorry, the industrial production year on year, so it'll be a good one as well.
The fact that inflation is not affecting everyone in the same way. So lower families that spend more on gas, on rent, on food are likely to be disproportionately affected by this high inflation environment and see their ability to spend being constrained. The higher income families, less so. Inflation is still going to be a concern and a constraint on spending overall, but it's not going to affect everyone in the same way. I think when we look at the housing market and the direction of the housing market, what we are starting to see is that there is this weakening in home sales, which has already occurred over the past 6 months. That's feeding through to home builder sentiment. It will feed through to starts. I think there is further to go to the downside in terms of housing activity, but that will take place over the next few months. It's not over yet. We're likely
just
to see
ranging on our baseline
on the housing front when it comes to overall home building activity.
So what are you looking for, Greg, in order to determine how deep the downturn will be? We talk about soft landing and hard landing, and it kind of conflates this idea of a slowdown that is probably expected across the board. What are you looking at?
Well, what I'm looking at is what businesses are doing. We are in this unique environment where businesses that we talk to are still talking about hiring workers at a slower pace, but they're still talking about hiring workers. We recently hosted the EY CEO Roundtable, and one of the key indicators that I paid close attention to is what I call the talent gradient, how companies are reacting to this expected slowdown in economic demand. And what we are hearing is that businesses are looking to initially slow hiring rather than proceed with massive layoffs. That's the first option, slow hiring, then strategic hiring freezes, then strategic layoffs, and then more broad-based layoffs. But the talent gradient has moved up. And what that means in terms of the potential for consumers to continue spending is that that should support household income going forward.
Cable setup, it's looking pretty good.
Businesses are still looking to build resilience. They're not retrenching, and that's another
That was
encouraging sign in
the
terms of
Asian line which price went to untouched, so we'd expect price after the open to come down to our NY line, but we want to be well away from it, so
the lower class, Greg, which are being hit on
see what
both
happens
sides,
with
right?
that setup.
You're seeing the cutbacks happening more there because there aren't the workers and the wages are going up much more quickly. What are the longer term consequences of the K-shaped recovery?
So we're green and green on pound dollar now, look, and RSI, so we could have been in on here for a
we're
buy.
going to see a different approach to labor going forward. We're going to see an approach in which labor is viewed as
You don't always have to wait for the candle to finish, as long as we've got everything sinking. I would have gone in for the buy on that one if you'd been watching it. I didn't set the alert, so US-30
but they are going to be strategic.
It's best to break that level.
Sectors they're working in.
We're still all red, look, RSI is 41.
More severe slowdown in economic activity are likely to be the ones that transition more at a faster pace from this reduced hiring process towards more massive layoffs. So we are likely to be in an environment where
we can see the difference between this and if you change to Hakanashi
and this different talent gradient affect the response of consumers and their ability to navigate through this period of uncertainty. But really, my key focus right now is what businesses are doing.
If you unsure about trends, but like you say, as you can see, look, it's still the same, still to break that baseline, whatever.
Investment in hiring, and that will be key in gauging whether we do end up in a recession and how severe that recession is.
Hey Greg, awesome to get your reaction to that data. Looking ahead to retail sales, that's our next stop for this economy. Greg Dacre there of EY Parthenon. Just going through the sequencing here of hiring and firing. Tom, first of all, you adjust your hiring intentions before you get to big layoffs. Apple, the latest Mark Gurman story in the last 24 hours, laying off many of its contract-based recruiters in line with the slowdown in hiring we expected from that company.
Right.
And Tom, it's not just Apple. Of the big tech players, we're seeing it elsewhere too.
I'm really glad you bring this up, John. I take great issue with conflating contract-based employees with full-time employees. There's a huge
you can see our last level of the RSI as well. I always like to put a line across that.
Name the company, Walmart, whatever. Any small business people watching.
So potentially could come down to that. If not, then if it goes there, you can take a sell once it breaks that level again. This is where it pinged back before. So
you got it. There we go.
I'm not apocalyptic about this.
I think JP Morgan's going to go out and hire a jillion tech people this year.
I think, honestly, and just last point, and then, John, you can carry on. But I think that from my perspective, I don't know, something else. But I think it's really important to note that you have seen jobs be a lot stickier at the high ends. You're seeing that, the participation rate go back up. You're not seeing it on the low end. I'm struggling with that. That's all.
I'm just signing off the Bloomberg right now before I run to the other studio.
What you're carrying on with?
I am. Coming up, Joaquin Phelps of PIMCO. Awesome conversation with him and Kate Moore of BlackRock. And Sam Linton-Brown of BNP Paribas sat down with me on the morning of June 16th and said, buy stocks. And I was the idiot saying, why would you want to do that? And we've rallied 17% since then on the S&P. So we'll catch up with him.
Very cool.
Looking forward to that at about 9:30 Eastern Time. From New York, this is Bloomberg.
Brilliant, and we're there. Yay. I'll do nicely. Went for 10 pips on that. There's a possible 18. Took 10. And there you go. That was a winning trade. There you go, team. That's how you trade the news.
The daughter daughter of the former Vice President Dick Cheney is vice chair of the committee investigating the riot at the Capitol. Her anti-Trump stance has made her an outcast in her own party. Now, Bloomberg has learned that the Trump Organization's longtime CFO is in plea talks with New York State prosecutors.
So it was good, so it should bounce off that 236. It may push through again. Like I say, I can take a sell again if we get down to this oversold zone. But again, that's just to show you a good example of how you trade fundamentals on a 5-minute time frame. And we took a, we got 20, 30, about $50 on that.
The Boodle smelter in the Netherlands had been operating at a reduced rate because of soaring energy prices. Zinc has a number of industrial uses. American Airlines is gambling that a market will emerge for a new generation of aircraft that can cut transatlantic travel times by half. American has placed a firm order for 20 Overture jets from Boom Supersonic. The planes will not begin carrying passengers until the end of the decade. They sell for $200 million each. United Airlines and Japan Airlines have also committed to buying them. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
So it was a nice trade, and we just had to wait basically 10 minutes or so from the news event. We entered here. So we had double confirmation on our trend and the RSI red, and that was enough. And we used our fib to give us a TP level, a reasonable one. Like I say, you can go setting crazy, take profit levels and say it's going to come down to this level. It might do, but I'd rather take a re-entry again once price breaks below the 236 than actually just assume that from the start, especially as we're not in the market's not open. It's, you know, this is pre-market trading on news. So like I say, we can watch the RSI again. Remember, if it curls back into the zone and we get green, then we're good to take a counter trend buy, but at the moment it's looking good. That was a nice little win. We'll try and trade this, or we'll trade this news. So the industrial production year on year again will be higher than expected, will be bullish for the dollar, so we could see the reverse on the US-30. Again, it depends, it's going to be close to the open, but we'll see if we get a move on it as it gets nearer. Got a bit of time yet. Now, what did NAS do? NAS also, yeah, basically the same. It sits 618 now, look, zone on the fib. So again, we're all red. This could go lower. It's going to be slow. Again, just see if this breaks. Got 3 minutes left on this candle. Look, it's going to break below the 236. We've got a level here, as you can see, where
what do you think of when you think of a battery?
Price reversed.
For most, it's what we use to power devices for both work and play, maybe even your car. Over the
there you go, look at that break.
Decades,
beautiful.
Way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to a increasingly renewable power driven grid, we also need to be able to store
nice
energy
drop.
and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in.
Brilliant. And we just jumped in there and got a little bonus trade, and we got another 10, 15.
Store energy on a massive scale is in many ways.
Oh, we got another $20 there. There you go, look, see, proper true scalping, no messing around. You don't worry about stop loss for these trades because you're not holding them long enough. You're just getting the green and getting out. You're reading. We're getting close to a zone of reversal here, so you don't want to be holding too long. But again, we had everything sinking our way, so I saw that move and went for it. So that was nice. That was a nice little bonus scalp.
Be a huge deal if China ended its COVID zero policy, because essentially the market is always kind of on edge. Is China going to shut down? If they do get rid of this zero COVID policy, I think that will be quite telling for the market, especially for the next year.
Ellen Wald, Senior Fellow, the Atlantic Council there on oil. A little bit of a lift today off the caution seen yesterday of China. West Texas Intermediate rounded up to $90 a barrel. Brent crude.
So again, you know, you've got to go TP1 and basically you could set that, the top of those candles as a TP2, so it's close to it.
Numbers that I'm going to suggest, Lisa, are unimaginable. Netherlands gas, one of the benchmarks of continental Europe. This is natural gas.
And ideally we want to be entering again if we go into the 25 zone, but it depends how close it is to this support level here.
Moving average study, 3 weeks after the invasion, 727% annualized.
Well,
we'll go, Lisa, please.
Well, I mean, this is what John was saying. That right
Cable's now pushing up away from our NY line, which is what we want to do.
Higher than where
and
they
have
normally
that
are.
away from it. The further it away, the more pips we can get as it pulls swings back. That's the way.
The social consequences.
Gold, yeah, pushing down on that. Here's the next news coming.
Will give us one vignette.
Industrial production.
Of what all this numbers mumbo jumbo means to the people of the Netherlands or the people of the Czech Republic.
Well, it means, I'll give you two things that it means. Most importantly, it means that without significant help from governments, they're going to find it very hard to afford to heat their homes. As you say, gas, we all use natural gas to heat our homes in this part of the world. You can't afford that to change by a factor of 7-fold, 5-fold from one.
So just pushing up again. No, just watch the RSI. Slowing the downtrend, still broken our base level, but you see when it approaches the zone of here, look where we had last level of support, you can see here and here, look, so basically put a zone
a big zinc smelter was shut down because
across
it's just not
there and here, look, and you can see where there's a chance that price will
in factories across Europe. If we look at the German power price for next year cost 500 euros a megawatt hour today. That's 5 times what it was a year ago. The German industrial economy has been built on.
So it kind of got there, and then you know it might drop lower. We're still pushing down, but it's just close to that. Again, just risky. And we've already had 2 blocks of trades on this, a win, or 3 blocks on the news.
Retail and quite frankly, as you mentioned, zinc industrial.
Like I say, our next position will be if the RSI comes back and gets back into that 40 neutral zone, then we can look to take a counter trend buy, quick scalp, and if it breaks above the neutral, we'll go again for another buy. That's my thoughts. Or it comes down to this level and we'll take a sell. Once we've got some kind of, at least one of the trend bars our way, I'm happy to take an aggressive position. If it's 2, then obviously it's a winner. So like here, look, here the trend bar was red, and like I say, it just, that really didn't come into the zone, but it did here, look.
In the meantime, as we head into
So you could have entered a sell from here. You were still green on the longer trend, and then you just got in on the next 2 candles instead. If you wanted to have ultimate confidence in it. Same here. It went green first. RSI then popped just as the other one went green. So again, you could have just got in there again for 10 pips or so.
There's a real divergence there, which is a bit jarring, but I think it reflects wider worries about
all these were winners. Again, you got in on here when it dropped, look,
by the
red and red.
Power crunch we're seeing in Europe,
That dropped down.
the
then
slowdown
came back.
in China as well. Which
Again, you could have had a counter trend buy, or you just waited again for the sell, and then it was here.
I've always talked a lot
And then, like I say, the buy was here, so you had, you know, a couple of sells. You could have got an aggressive sell here because you had one trend bar and you had a break into the neutral zone above our bar, so you could have probably waited for this candle and then gone in. So there's so many trades, there's no reason to have FOMO on this kind of system, the way I teach it. There's plenty of trades in a day. You can easily be trading 30-40 trades on whichever you want to choose, be it gold, DAX, you know, US-30.
Evidence of this slowdown beyond just what's normal for seasonal types of
So we go, the price broke into that zone look, so
downturn that has not yet been
yeah, we could have held longer, but again, hindsight's great. You're better to take the profit when it's there in front of you. Now we should see a rejection, possibly.
High prices that consumers were paying.
You can see it's a push back up, pushing the wick price back up, exposing the wick.
Some weakness in Chinese demand.
This is a level of support we've mapped out now. Look.
Now people are worried about the direction of the economy, but we have seen a lot of strength to counterbalance that, as you allude to, Lisa. I mean, people are flying a lot, and again, you know, diesel demand will be driven by this switching in Europe away from natural gas to other relatively cheaper source of energy, coal and diesel. So I think the picture on demand is mixed. I think traders are worried about the broader economic outlook, but as you say, there are pockets both of perhaps a little bit of weakness, but also very robust demand.
Well, Kennedy, thank you for the brief, and it's something, folks, we have to follow day by day. We're removed across the Atlantic, but what I'm sorry, you know, apocalyptic. There it is, a word we made jokes about this morning. Lisa Abramowitz, and I'm sorry, it is apocalyptic when you look at those charts.
Well, it's game-changing. And how much can the Euro region avoid recession, and not just avoid recession, but a deep recession at that, because of how high natural gas prices have gotten? And we've seen that out of Germany with the recent confidence data that we got this morning. It was really brutal.
Yeah, but the bottom line is, and I mean, I think this is really important. Governments are going to come to the rescue. It's unthinkable they won't. And then you essentially monetize or fiscalize the crisis.
Right, and you're hearing that more and more. You're also hearing, though, about substitutions, and now you hear about government saying you can't heat your pool fully on these days, and you have to keep things at this temperature. This is important because it limits some of the commercial activity, which is what's leading to some of the feelings about what we're expecting with growth.
We're going to continue to follow this, and of course, with the expertise of Will Kennedy and his team, the industrial impact across continental Europe as well. Futures -12, Dow futures -69, the VIX flat 20.12, I'll call it. I would note dollar strength this morning. Stay with us on Bloomberg Radio and Bloomberg Television. Good morning.
For the open, we're going to mark out an hour
Welcome back
before
to another
the
Western
open.
and Southern Open update from
There.
Bloomberg
I'll
TV and
mark
Radio
out
from Tennis Channel. I'm Jamie Maggio.
the open.
Two superstars of the men's game took center stage on day one in Cincinnati. Three-time major champion Andy Murray came through a marathon three-setter against Stan Wawrinka in their 22nd meeting on the ATP Tour. The Scot battled the heat and cramps as well as his opponent, firing 10 aces and 28 winners in the victory that took just under 3 hours on court.
Good lad, Andy.
Up next for the 35-year-old, fellow Brit Cam Norrie.
I think he has a great attitude. He works extremely hard, and you know, he's absolutely getting everything that he can out of his game and out of the sport, and I respect that a lot.
And on the women's side, Amanda Anisimova moved on.
Tickmill, shaping the future of trading. With
an excellent opening day win over the informed Daria Kasatkina. The American closing out the 9th seed 6-4 in the second set to punch her ticket into round 2.
So like I say, I'm going to go in with NAS on the open. I go on US-30, but NAS you get a little bit more for your money when you've got a smaller account, a bit more margin. So I've put a little kind of breakout zone around. As you can see, it's already kind of broke the zone again. I mean, you could stretch it higher, look and say actually that's the zone. You know, but I try and mark out the hour, the tops within the last hour, so kind of there. ideally that's probably the more like it, but then it becomes quite a big area to say it's a breakout. 50 pips, you see, so anything more than usually 20 or 30 I don't see as a true breakout, but I just mark it as a zone, just because I know price always kinds to come back and retest these levels, so it's good just for me to identify. So I put it at the top of there, and at the moment we're kind of here, so that's a bit more respectable. The kind of gap is like 40.
When you think
and obviously I can look, look left and see where there's potential other levels.
One space agency that travels under the radar.
Again, it could have a false break here, so yeah, could be higher because you've got a level here as well. Look, that's more like it. That's a decent. I'm going to put that line in there because that is a resistance, and you've got another one there as well. Look.
ESA wants to be a leading force in furthering humanity's
but we're well away from those zones. At least I can mark this as
successful human
that's the open.
Mars. We are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today. It's going to be short-term.
Bloomberg Markets, the close. Weekdays on Bloomberg. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Yields up, stocks down. Live from New York City this morning.
Live.
Good morning.
We're live from London.
Worldwide, we're negative, about 0.25%. The countdown to the open starts right now.
Everything you need to get set for the
30 minutes, you can see the drop has finished, kind of finished on that homes buildings news. We've found the level of support as I mapped it out, look. So, you know, you didn't want to be taking any more sales now. Unless, like I say, the RSI dips into that first oversold zone and it's a bonus trade. As long as our two trends are both the same, I would get another sell, and you'd expect price to have broken that support zone then. But as you can see now, look, it's kind of in a range. The RSI, I wanted to get back into that neutral to take any kind of a buy, and even then it's close to, yeah, talking about 5-6 pips. So we'll wait for the open. We're going to wait for this news the next 15 minutes. Here we go. Production, industrial production coming out in 13 minutes time.
Right now what we have are puzzle pieces that don't fit.
We just need to see more data
before we get more. It was a good successful trade.
We've got PCE, we've got that another non-farm payrolls print, and then Jackson Hole before the September Fed.
Something's going to give.
These high-frequency indicators, the volatility has been huge.
There's going to be so much volatility for the rest of the year.
There has been already this year. Joining us now is BlackRock's Kate Moore and PIMCO's Joaquin Fowles. To the both of you, thanks for being with us. And Kate Moore, I've got to begin with you. We've been whipsawed from data point to data point, from payrolls to CPI, then to Empire Manufacturing of all things. That putting some fear into this market about growth going forward from here. Just where are we in this cycle, Kate?
Yeah, it's a good question, John. And
kind of listening and watching that montage before we started right now, you know, it is really difficult to figure out the perfect direction of the economy and exactly where we should be going in markets. One thing that was kind of not discussed in relation to the economic data, though, is how important positioning has been in terms of the direction of the market. You know, we've seen a lot of hedge funds reduce their shorts, kind of neutralize many of their bets. At the same time, more long-only mutual funds and real money asset managers have just been sitting on their hands. There's not enough clear directional information to take new sets of risk or to reduce risk from here. So I think we're going to have this uncomfortable trading pattern for the next stretch into Jackson Hole and into the next CPI print.
We've had one hell of a run off the June lows, that's for sure, up about 17% on the S&P. Futures a little negative this morning, down by 0.25%. Joachim, you've been on top of the cycle story. The team at PIMCO talked about shorter, hotter cycles. What's the temperature of this one?
Push up again, could hit the 236 and we could come down again.
John,
we could be forming a double bottom, W, you know, but like I say, we just want to wait for this news now. We need another little catalyst to see if we get a final trade before the open or whether we just leave it.
We've seen and the easing of financial conditions that we've seen recently. The reason is that the sharp tightening of financial conditions on the back of Fed tightening earlier this year still has to work its way through to the economy. I think we're seeing clear signs of that happening now. So if you look at inflation is eating away at disposable incomes, hiring plans are down, weekly claims are up, hiring intentions are down as well. And if you look at the housing market, we had housing starts this morning, which showed that higher mortgage rates are really starting to bite. So I think the recession is coming. What we've seen in financial markets so far is a nice summer breeze over the last 2 months. But I think fall is coming and eventually winter, so a recession later this year still should be the base case.
You're not alone, others looking for the same thing. JP Morgan isn't. Marko Kolanovic said this yesterday afternoon. Signs that a peak in inflation is behind are growing, which reinforces the idea that Fed hawkishness is likely behind and a soft landing is increasingly likely. We feel the uptick in risk appetite is justified. Now, Kate, can I come to you on that? That a soft landing is increasingly likely. That is the JP Morgan take. What is yours?
Yeah, Marco's been very bullish for a long time. We know that, John. So our take actually a little different than Joaquin's. We're actually in a no recession in 2022 camp. And we've been calling this a very soft economy as we get into the fourth quarter, but not necessarily a recessionary economy. And the big change for us, of course, is around the labor market. It's not just that the labor market has been stronger than many expected, but actually taking information from companies as they were reporting second quarter earnings, talking about their own hiring plans. Sometimes they're cutting back on hiring plans, but sometimes that is because they still can't find people for their seats.
So we're set up for NAS, we're set up for US-30 for upcoming, and then we are set up for our second trade on cable.
So I would say as long as the labor market stays tight and as long as we continue to hear
again, it's going back to test that Asian line already. That's great. So it's almost a repeat the opposite way this time and see if we're going to get a drop. We've got plenty of time. We're not going to take a trade till we hit this line here.
Growth environment, but not recession into year end.
Joachim, that is the missing piece in
case it goes higher. We don't want to be missing out.
Holding up. If you're looking for that recession later this year, Joachim, where's the labour market? What's it look like?
Well, I think the labor market will show rising unemployment. I mean, there are mixed indicators in the labor market already now. So yes, markets had focused on the very strong payrolls report. If you look at the household survey, employment has actually been flat to slightly down on average over the last 3 months. And as I said, weekly claims are up. So I think you'll see unemployment rising. This is not going to be as deep as the pandemic recession. This is not going to be like the great financial crisis. This will likely be more like a recession, the one in 2001. Back then we saw the unemployment rate rising to something like 6%. So that's probably a base case for this coming recession. But it's really hard to say because we are in a very different environment. Inflation is at 8.5%. You will not see the Fed coming to the rescue as fast and as furious as they've done in the last 3 or 4 cycles. Also, the government will probably not react with massive fiscal easing given the political constellations in Washington. So what we worry about is that there is really no safety net from monetary or fiscal policy this time. So while this recession is likely to be a mild one, it could be longer, it could be more prolonged, because the government and the Fed won't come to the rescue anytime soon.
Short and shallow is the consensus. Long and shallow is not. Kate Moore, what do you make of that? That maybe if we do get a recession, it lingers longer than people expect?
Well, I mean, I think these are all quite fair points. It is very true, and I would certainly agree here, that we're not going to get either monetary policy or fiscal policy coming to the rescue at this point. We are very much in the camp that the Fed will continue to do what it needs to create the long-term price stability that they're targeting.
So US-30 still pulling up a little bit, not really moving much now. We're coming towards the open, we're coming towards this medium impact news event, industrial production.
I think all of this together is going to lead to, less fiscal support. The one thing I think I feel a little bit more confident about, though, John, is that, companies are managing the slower growth and more challenging economic environment better than a lot of people had expected at this point. There is, concerted effort across all industries to focus on cost reduction or to upweight businesses where they're not experiencing the same types of inflationary pressures. We've also seen, I think, smart management of labor, and we're seeing fairly strong business-to-business demand for industrial equipment and machinery. Companies are thinking about how they're going to secure their supply chains going forward, and there is an investment that's needed for future growth that we haven't seen companies back away from yet. So it's going to be a complicated picture. Even without the fiscal and monetary support, I would suggest the corporate side is in fairly good health.
It is super complex, that's for sure. Futures right now, about 22 minutes away from the opening, bound down 0.2%. Mike McKee going through the housing data a little bit early this morning. Mike McKee, tomorrow, it's all about retail sales.
Yeah.
Because tomorrow, retail sales, big one.
What we've seen so far from the retailers, at least the discount retailers who were reporting today, generally good news. We'll see if that holds for the entire sector. But it has been a complex economy this summer, as Kate was saying. And I think she put it best at the beginning when she said, we don't know where the market is, where the economy is going. It's very, very hard for us to
synopsis of what's gone off recently.
That is true for the Fed as well.
Like that.
You look at these numbers and you put it in terms of hawkish or dovish, and you see it's a bit like a tennis match going back and forth, maybe appropriate because the US Open starts in a week or so, but it is very hard to know. And what that has done, John, is create a situation where financial conditions have tightened, as Joaquin was saying, but now they're rolling over.
Got about 5 minutes to go to this news event.
Real rates. You see the real rates.
Say it might not do anything, but I think it will. I think everyone's looking for data.
The Fed has to push harder against the markets. Well, that's what the Fed seems to be saying. Those who have been talking lately about it have pretty much all adopted the same view that they are going to go farther than maybe the markets are expecting. Richmond Fed's President Tom Barkin have to move rates into restrictive territory. Charlie Evans raise rates this year and into next. Jim Bullard wants it as high as 4%. And we know Neil Kashkari was on the same page. Even Mickey Bowman, who is one of the quieter members of the Board of Governors, says we should have 75 basis points on the table until we see inflation declining.
Mike, do you think this could produce the defining moment of Jackson Hole next week? Just based on how things are stacking up here.
It's beginning to look like that. If you were writing a speech for Jay Powell, maybe you want to lay out the fact that you should not fight the Fed, because what they're doing is calling into question the Fed's credibility, and that's the last thing Powell wants.
Mike McKee, thank you. Looking ahead to Mike McKee's coverage of Jackson Hole, Wyoming next week. Looking forward to that coverage too. I want to come to you on that, Joachim. They are raising policy rates, but financial conditions are easing in the face of that.
So a couple of minutes left, and like I say, production year on year is looking to drop to 4% from 4.2. Month on month, that's a drop. Obviously, 0.3 from -0.2 to 0.3 production. So I say it could be slightly up, month on month, down on the year. Who knows?
I think they all remember
higher than expected.
That only hawks get to go into central banker heaven. right?
I love it because at the moment most news events, you know, the consensus whoever's doing it is not getting them right, so that's good for us as scalpers. The market moves, so let's see. And then tonight we've got one of our favourite trades where we're doing the API crude oil. That's half an hour after the NY shuts, but we still can enter a trade on that and let it trade over into the Australian Asian session. But usually we get a good decent 100 points, 10 pips on that.
The lows on the S&P. On the NAS-100 we've had close to 23%, a 23% rally off the lows of June 16th. What do you do with that strength that we've seen?
Caution returns to markets.
I mean, this is going to sound a little like a cop-out, John, but I can make a case for 5% higher and 5% lower in very short order, in part because of all the cross-currents in that the macro data, in part because of what we're talking about in terms of the Fed. I do think, however, and this is the point I was making when we first started, that positioning is very neutral, in some cases light. You know, a lot of people are holding a huge amount of cash. If there is incrementally better news flow, if people read the Fed tea leaves to be slightly more supportive, not to 4% by year end, for example, but to be measured and data dependent, and inflation starts to roll over, I think there's a lot of room for investors to put risk on in their portfolios. Certainly true of our portfolio, many of my colleagues at BlackRock, I would say many of my peers on the street. In this case, though, as long as we're getting consistent positive information from companies like we did in the second quarter.
Get ready, it's about a minute to go.
No inventory mess ups, demand remaining fairly robust, and some of the economic data looks slightly more supportive. You know, it's possible to see another 5% up from here, but we're not adding a lot of risk right now, John. I think we're kind of in a wait and see mode. We like what we own, and the places that we are adding risk are more in credit than equities.
We'll talk about that in just a moment. Kate Moore, Black and Fowles, sticking with us. Right now, futures lower by about 1/4%. Had some earnings a little bit earlier this morning. We'll talk about them in just a moment. Let's get you some movers. Here's Abby.
John, well, starting out with two of those earnings stories. Of course, we are talking about both Walmart and Home Depot. Mixed action between these two big box retailers. Walmart is
Let's log in on US-30. Let's see. Let's say if nothing moves, we won't trade it because we're so close. But you never know. It's just, it depends on this result.
Fiscal year earnings loss to down 9 to 11%. It had been down 11 to 13%. Investors like the fact that they're improving even just a little bit. Home Depot, on the other hand, down 1.2%.
Good luck, everybody, if you're going to trade it.
Transactions are down. Plus, they did not raise the full year guidance. Turning to Ally Financial, up 6.5%. Warren Buffett's Berkshire Hathaway has tripled its holding to 30 million shares for this auto and home lender. They now own 9.7%. Really a bet on the U.S. economy. It's also important to remember that Warren Buffett back in 2008 said, be fearful when others are greedy.
Industrial
be
production.
Greedy when others are fearful. So they are really increasing their stake there. And then PayPal up almost 1%. This as it's upgraded to Daiwa to an outperform, even after rising nearly 50% when Elliott revealed their stake. This is also a bet on the economy. They're very positive.
Got a green trend. Got a green trend. So let's see.
Abby, thank you. Coming up on this
program,
getting a read on that US consumer.
Oh, it's dropping. Look at that. It's ranging around. Looks like there is a result.
I think the home improvement category,
here we go.
Category perspective is a winner.
Better than expected on production, 0.6. And worse on the year. Oh, let's see. Could be fighting. Sat on that 2.6, so I'm not taking any trade yet. I'm just waiting to see if we get a move. RSI hasn't reached that green. Is it going to push into the zone? No real movement. And gold was the one. Gold kind of moved on that look. Worse, the worst expected news, which is the industrial production down to 3.9. So yeah, you should have taken a buy on gold there.
Push have you seen?
Sometimes US-30 moves better than gold, sometimes not. It's going reverse now. Look, it's going to drop.
Committed to doubling
the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed.
Let's get ready for the open. Let's see if this moves down or not.
It's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org.
We've got $10 on that.
Where the music
Yay.
plays on. BSO season sponsor, Bank of
See it as a
America.
bonus trade, that's it. I could hold, I just don't want to hang around because we're so close to the open, but there's the drop. So yeah, we've got a nice cheeky $10 on that.
Rise, employment rebound, and fiscal policies
It's something I wouldn't usually trade.
to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg Surveillance is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th, only on Bloomberg Television and Radio.
Yes. Pushing down, like saying, so it'll bounce off that zone again, more than likely. So now just wait for the open. So that was alright. I say, yes, something I've not traded before. That I didn't know if it's going to move anything. And when it's conflicting, one's good, one's bad. Obviously, the year on year is probably the
overall spending is going to slow down.
The bigger indicator. So.
The latest on retail in America, Walmart clearing a low bar, topping profit estimates
Don't
after
even
slashing
mention
its
it on
outlook just 3
Bloomberg,
weeks
I bet.
ago. The CEO saying the following: "We made good progress throughout the quarter operationally to improve costs in our supply chain, and that work is ongoing." Elsewhere, Apple joining a growing list of companies laying off staffers and slowing down hiring. The Bloomberg coverage starts right now with Katie Lights and Taylor Riggs. Hey, Taylor.
John, you're right. It is a low bar, and I think it's also the third time this year that they were cutting the bottom line. This is, of course, I'm talking about Walmart. So it is that low bar. Analysts
we've got a
mostly
mix.
positive, of course, after sort of clearing that. They're now looking at a full year EPS that's down 9%. Previous expectations heading into this, that cut
See how the sell was early on here, then it was synced here, and then we've got a green, and the RSI is still kind of in a no man's land, so it come down, it's got a few pips, it's fine. Not going to be a great mover and shaker with 10 minutes to go till the open, but a win's a win, and that's what we're looking for. We're true scalping, you know.
As I mentioned, it has been a wild ride because we've gotten some tricklings and some updates as we've been going along throughout the quarter. So since the last earnings report, of course, are still up about 8%, but it has been a rocky ride every time they've come out and maybe pre-announced or cut some of that full year guidance. I do want to talk about just some of the individual issues going on. Of course, U.S. comp sales look good, John. You're up 6.5%. Revenue was up 9%, so that looks like it's tracking
Locked in
inflation.
the open.
Then it really was the transactions that
Is
are
it going to
only up
push
1%,
and break
maybe
the
some
support
analysts are
zone that
looking
we've
at.
got?
You still have an average ticket that's up 5.5%.
Or are we going
Again,
back
some
up?
of those inflationary pressures may be starting to be passed through.
Back to this 382 in our baseline level. On the open, that's still, even now, that's still enough for 20 pips, so I'll do.
Katie Lyons, shifting hiring intentions. We know that story for big tech.
It's the story for Walmart, and it's
Cable
definitely a story for big tech. We've
shaping
had a
up
trickling of
nicely still,
announcements
as you
over the
can
last
see.
several months of not necessarily just outright layoffs, but a freeze on hiring or a slowing in hiring
Price at the moment
intentions. So that
is
includes the likes of Microsoft, Netflix,
about
Twitter,
30 pips
Alphabet,
away,
Meta,
so
and yes,
that's
Apple
good.
is
That
among
means
them,
it's
and
a
that's the
valid
one
trade.
in focus
Still
today.
time
It
though.
announced that hiring
Still
pullback
plenty of
back
time
in
left on
July,
this
given
one.
the uncertain economic environment. And we got a scoop from Bloomberg's Mark Gurman
NAS
overnight
trapped in
that the
that
company has
zone,
laid
so it's
off
formed a
about
little bit
100
more
of
of a
its
kind of a
contract-based
breakout now.
recruiters
You
that
could
were
take,
responsible for
get
hiring new
rid of that
employees.
candle
Again,
there and
those are
drop it down to
contractors, not
here. Our
full-time employees. The
baseline
company
is the
employs more
top.
than 150,000 people, so we have to keep that 100
So
number
we'll
in
see where
context.
the
But still,
RSI
it
goes on the
underscores
open as
slowdown
well.
underway at Apple and its attempts to rein things in when it comes to spending. And we know, again, that they are not the only ones. According to Layoffs FYI, which is a website that tracks job cuts at startups and newly public companies, a lot of which, of course, are in the technology sector. More than 37,000 positions were eliminated at 467 companies globally in the second quarter. That dwarfs the 3,000 we saw during the same period last year. So it speaks to an industry that for years, John, has been bulking up, and now they're pulling back in the face of a possible recession.
Kelly Lice, thank you. We expected those numbers, those headlines to come through. They're starting to come through. Kelly there on the layoffs and Taylor Riggs there on top of what's been happening with retail and Walmart this morning. I've got 1 minute left each with Kate Moore and Joachim Fowles. And Kate Moore, I want to come to you on what you said at the end of the last segment, just briefly, about credit and maybe not equities. What is the more convicted buy for you and the team in the moment?
Yeah, we're more convicted on credit than equities at this point. And there's one other point, John, I want to make, which is how we think about the opportunity set for global companies. Something we haven't mentioned this morning is that the data in Europe and China has deteriorated much more rapidly. So as we look at opportunities, we're a little bit more U.S. domestic focused at this point. We want to upweight companies that are geared toward the high-end consumer, to that business-to-business spending around machinery, equipment, supply chain resilience, and security, and really think long and hard about sustainability of free cash generation in a lower growth, maybe not deep recession environment.
The China data was not terrific. It was pretty ugly. Over the weekend, the credit data, and then yesterday morning as well. And the numbers out of Europe aren't going to look good for the economists on Wall Street. That's what they're looking for later this year in Europe. Joachim, I want to finish with you. You said we're in the fifth set. We're not in the fifth set of a tennis game for this Federal Reserve. If we get to the fifth
7 minutes to go.
Where's the policy rate?
Get ready, everybody.
Where does it end up?
We'll see what we can get. Our final trades.
We'll end up closer to 4%.
So there's no more news today apart from the oil later on. So that's the end of our fundamentals. This is just purely going to be an open rush and see what we can bag on US-30 and
So I think
NAS.
4% handle is quite likely for the Fed funds rate.
That's the city view as well. Joachim, thank you. It's good to catch up. It's been too long. Alongside Kate Moore, and Kate, the brilliant Kate Moore, as always, thank you to you. Futures are down just a little bit, down 0.25%. The prospect of 4% Fed funds, I think we've been fading that story over the last month. That's led to quite a sparky equity rally since the June lows. Coming up, the morning calls, and later a victory lap off the June lows. We'll catch up with Sam Linton-Brown of BNP Paribas, who on this programme on June 16th said to buy. We'll talk about what he's looking to happen now a little bit later. From New York, this is Bloomberg.
So I wonder if for the open we're going to get a nice bounce up. Could be. We went green, now we're red. Could be selling. Looking to drop. I'll just squeeze this up a bit so we can see. And kind of levels, you can see you've got a 0 level and then we're well out.
In the way that Shinzo Abe imagined it.
A long way down to his levels here, look.
Kishida faces today is very different from the one that Abe Shinzo was faced with when he became prime minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women.
5 minutes to go.
One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs to be done to quote-unquote revitalize Japan.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers.
At the Triangle in Ashford, Kent, 1- and 2-bedroom apartments start from just $220,000.
Thank you.
And preparing you as only Bloomberg can. Weekdays on Bloomberg.
Four minutes to go, everybody.
minutes away from the opening bell this morning. Good morning to you. Basically where we were this time yesterday. Futures just a little bit softer in the face of some weak economic data. Here stateside, that was Empire Manufacturing yesterday, and we still squeezed out a day of gains. Futures right now down about 1/3 of 1% on the S&P 500. As the price action, here are your morning calls. Dower upgrading PayPal to outperform 116 price target, saying the payment sector is poised for high growth in the long term. Stock is positive, about 1/2 of 1%. Next up, Citi downgrading Zoom Video to a sell, $91 price target, highlighting new and upcoming obstacles to sustainable growth.
We do trade price action, so as asked me, of course, that's what most of our system is based on.
Downgrading Bed Bath & Beyond to a sell, seeing an unrealistic valuation.
We look at candlestick patterns, we look at the market, we try and trade as few time frames as possible, so we stick to the 5 minute and we look at price action and how it moves, areas of support and resistance, and our indicators just confirm what we already are thinking. That's the way I see it. If we're not thinking, we're not trading. Like I say, we've got a double bottom here, so we could see a nice push up on the open. We've got a green trend bar, we've got RSI pushing, so let's see. There we go. We've got 3 minutes left. We've got NAS as well. Good luck, everybody. See, NAS you only need 56 to trade. It's really double on US-30. So I'm going to go in on NAS on this one actually. Let's have a look. NAS has got double red as well. So yeah, I'm going to switch on to NAS. We'll watch the see if there's 30, but just because I've got more margin to play with on NAS. And we've got 1 minute 13 to go.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city.
And we can just measure the gap down to here, look. That's a level of support. So yeah, we're talking maybe 100 pips, 100 points, sorry, 10 pips. We're synced red, RSI's red. Is this going to be a push down? Or is it going to bounce off this support? Who knows? We'll see in a minute.
India's second richest man, Gautam Adani, has committed $20 billion of investment over the next
Can move that line and we can see.
But India's massive
30 seconds left, team. Good luck, everybody. Let's just see how quickly my broker can execute.
And those of its two biggest billionaires.
Ten seconds.
So for somebody who's watching this and wants to be a successful global business leader, what are the skill sets? I would prepare.
Here we go.
Well before I got the job or was given the message.
Innovation, money, and power collide.
Let's see if it's going to play out. Then we're going to go.
With Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
24 seconds away from the opening bell in New York City this morning.
We're already in.
To you all. You know the numbers by now. Up 17% off the lows on the S&P, up about 23% off the lows on the NAS-100, and on the S&P taking out more than 50% of the drawdown from the high to the low of the year so far. And the S&P futures slightly negative going into the opening bell. That is your opening bell. Switch at the board and get to the bond market. Yields drifting a little higher this morning, up 3 basis points on a 10-year to 2.2.
Brilliant. Yes, we got out as it hit that level there, so that was really good. So that was another $30–40 there, $40 on the open. Brilliant. Remember, when you trade in a small account,
Let's start out with the big earnings winner today, and that of course is Walmart.
took the sell. Why did I take the sell? Because obviously we were red on the RSI.
They've basically thrown in the kitchen sink a few times this year, and to give you
And
an idea,
our trend bar,
down 9 to 11% earnings.
our longer term trend bar.
Not even growth, but investors are cheering that because the outlook had been so grim before. Chevron
I want to go again. Let's see if we can get any more.
This, of course, oil had been a little bit higher before, kind of recovering now down, but Chevron's still higher. Alcoa up 2.
Yeah, we just got some more. Cleared another 5 positions there. Got out as it hit that end. Beautiful. We got another 10, 20, 30, 40. So we've basically got bagged $100 there in the best part of 2 minutes. That's why I love true scalping. That's why we don't mess around. Yeah, we got 8, 16, 32, 40. Yeah. We're about $100 there in a couple of minutes. Now it's going reverse, you see. But we'll wait, because if we get double red, we can sell again here.
Inflation and the average ticket, as you mentioned, also up about 5.5%.
I usually do 2 batches of trades and then leave it alone as price wants to find me. We're kind of done a loose breakout zone here, but
how are you balancing some of the pricing power versus gaining market share, like they're saying within the grocery business, even though it is a little bit of a lower margin business? Let's talk about those margins actually holding up. And I think what's interesting is
yeah, the neutral zone's 51. It was going to push up or not. Let's have a look at US-30. US-30, yeah, look at that for an open. I said it was going to bounce up.
But this is a company that really is managing to do it, and
it's in that supply zone.
Continues to show that they're holding up their own worth here.
That's a good area to try and sell some in.
If you think about where we
so yeah, NAS was lame compared to US-30, but it's just the account size.
But again, the cuts and the guidance cut coming into this report, really some of the big underperformances of late.
Hey Taylor, it's been hard to trust the guidance. Can we put it that way? Is that diplomatic enough? Is that too blunt?
Yeah, brilliant. I'm going to scalp a couple of sales on US-30. We got another. What do we get? We got another $20. Another $20 there.
Taylor, thank you. Some good news from those retailers.
Just going to post those so everyone can see. Just jumped in on that pullback.
Anyway, energy. On the energy front, yesterday we were struggling. Energy right now up 0.7% on the S&P 500. So that's about.
Watch it wick. We've got a supply zone there. Look, as you can see. So people are queued up there. That's where the volume is for people to sell and only buy if it goes above that one level. So now we're green. So wait for this candle to settle down. So look at NAS, still ranging around, hasn't really made a move yet. So we'll keep checking on that way. US-30 100% has made a move. Let's see if this fills the wick and see if we can go again on some sells possibly.
By 4.1% on average. Now the surprises on the top
He's going to push highs, wait for that to push up. Because we're green, look.
We're talking more than 14%.
I could push really high. There's your level, look. The fib's already drawn it out. Here's your next candle.
As for the market reaction to these reports, average post one-day earnings move of about 0.1%. What's interesting,
remember, the news was better than expected for some of the production and for the building permits, so the market kind of reacting to that. There you go, look at that, watch it push up.
So that may be a sign that a lot of the bad news was already priced in coming into the reports, or maybe investors are just a little more forgiving this quarter than they usually are. The question is, will that forgiveness continue as
even if the news is bad, it's still good. Yeah, I understand what they're saying there.
In the back half of the year, John.
Kelly, thank you. Kelly Lights. They're looking for that weakness in the back half.
I want to see if it's going to get up to this level here before we do a sell. That would be good because we're going counter trend, remember.
That weakness to come through. But corporate America anytime soon. He's looking for the front half of 2023.
So look at NAS.
And for that reason, he was
rejected, hasn't really made any move yet.
The fate of equity gains over the last 2 months. The
We're
recent
mixed.
anything more then a bear
Still
market
looking maybe to sell up, red. Still going to push down.
Maybe this rally has a little bit of legs to it.
As inflation is easing, it's giving the Fed more wiggle room.
Any pricing for dovish pivot from central banks is a bit too premature at this point.
It's hard to see how markets can continue rallying.
And you could see this, what I view as a bear market rally, continue. I'm on the buy into it.
Yay, we nipped in there. Look at that, and got out just as it hit our level again. We scalped some more sells, and we got one cheeky sell on US-30 there. We got $10 on that one, and we got another $10, so $20 in and out again into seconds.
That was BNP Paribas Sam Linton-Brown on this program, telling investors to buy stocks at the lows of the year on the S&P 500, and I started to push back, and I'm pleased to say that he can push back now. Sam Linton-Brown joined us on the phone. Sam, awesome to have you with us on the program. Let's go straight there. June 16th on this show, you said buy stocks.
NAS now making a move. Look, there we go.
S&P 500 since then, up almost 23% on the NASDAQ 100. Give me the what now? What now?
Well, first off, thank you, John. That's a very generous introduction. Looking ahead, our view from here is more balanced. We're still moderately bullish. That's because positioning is still short, and we think we're very much in the zone to see.
Brilliant. And we got some more sells there, was in and out. And we got another 10. We got another $25 there. We got another $25.
For example, if you look at the S&P, which you were just referring to, 1 year forward,
scan and just post those.
we're at about 18 times at the moment, which is towards the top end of the 30-year range when you exclude some of the bubble periods. And being towards the top end of the valuation range during the downgrade cycle might make it quite challenging for the recent pace of recovery.
We're going to wait for it to find the level now, but again, we're all red. Look, synced again.
But only moderately from here.
Looking up left.
It's more a case of staying long selectively, adding some hedges.
Kind of got a level here. Look, if you have a look, there's the level.
Sam, it wasn't just equities that you were bullish on. You were bullish US stocks in the face of some real trouble at the time. You like the Aussie in the face of a slowing.
Got 1 minute 20 on this candle.
You liked European banks in the face of a European
It's going to come down, and then we're getting ready for our cable trade. Oh, looking tasty, for sells on cable once we hit that line.
In the short term, the risk in the US is probably.
And again, I'd probably set my TP around this level here. Look, but we're flat on our baseline, so.
And that suggests some of the lower quality portion
I'll go kind of there. Look, so you can measure that, and for where price is at the moment, we're talking 22 pips. That's perfect.
Range-bound selective downside hedges. In Europe, you mentioned the bullish.
If you're going to short it, it's going to be kind of from around. Say we're in now. Look, wants to be kind of around there.
Be a little bit more balanced. The European economic backdrop has deteriorated quite significantly. H1 was better than anyone thought. H2 we think might be worse than people expect.
Again, to make sure you've got plenty of leeway on the old stop loss if you're going to leave the chart. So we want to be kind of just above there. Look, it's the flat part of our baseline, and that's only risking 10 pips. So usually I like to risk a bit more. You could risk up to the next level, but you can always move it. Let's see. Just don't be stopped out. If that's going to be the high there, it's probably going to be the next level, which is there, just below here. Look, so kind of the flat part of our baseline. So that's more like it. Risking 15 to win 19, 20 pips. That's the setup I'm looking for. If we don't get some kind of massive move in the next 10 minutes or so.
And in contrast to the US, they will get stronger over the coming months. So we think the ECB deliver 50 bips at its next meeting, then downshift the pace to 25, given the growth concerns. But it's still 75 bips more tightening from here, with then a pause as they wait to see how growth data evolves. In terms of the rates impact of that, we actually think it means core yields in Europe can still reprice a little bit higher. So we like to sell 10-year bonds, targeting a move to 120 basis points, a position the team added at 75 basis points. They still think there's some further scope there. Banks, though, will be challenged.
Let's have a look back at US-30. rejecting RSI, but again you want to enter a sell if RSI gets into this crosses our 55. We're still green on our trend bars, so NAS as well, yeah, breaking. I said it would come down to this level. All red, it's nice. It's going to hit that 25, it could be another sell.
There is some scope for continued gains. Rallies will not be as fast or large as we have already seen, and striking some shallow hedges may be appropriate. Our targets from here are still moderately higher, i.e. 4,400 on the S&P, but the risk-adjusted return from current spot is not particularly attractive. The view from BNP, I remember a few weeks ago, BNP talked about the prospect of crowding in investors.
Again, you don't want to be selling. You just don't know if this is going to just, in that supply zone look, bounce up, or whether people are actually selling off because it's hit the supply zone now and taking profits from that move on the open, and will come down to the golden zone 68500.
They remain patient bears. That's Michael Hartnett over.
But to play with the rules, really, you want to be, the RSI wants to be crossing into the neutral to take the sell, aggressive. See, look, you could be ranging around for a little bit now, so that's why you just don't presume, even though it looks good, it looks like you want to be in early on a sell. Your trend's green, your RSI's still green and high, there's still room to the top, you know, it could easily break that level.
Apocalyptically bearish.
There was a massive swing in sentiment. I think that, coupled with that perception that the Fed became a bit more perhaps dovish, led to the rally that we've seen.
The conversation up next.
We're watching US-30, we're watching NAS. So aggressive if you're going on one trend bar. 2 means you might miss a few pips, but it's more, was a higher percentage of it hitting. That's the choice of you to which one to do. So there's a nice candle on that. Hit that supply zone. Like I say, it's ranging around now. NAS, push back up, you see, so again, so let's just again messing around, but you're still red, red, red. So there's a good chance to leave it pushing down. And we'd like to see a retest if we've got a kind of a breakout zone. I know it's not a true breakout zone because price had already moved quite significantly, but I marked out the next area I thought it could come down to. Again, I can get rid of these
very few secretaries of state
ones at the top. Don't stack up now because we're well away from it. We can just put them back in again if price goes up there.
8 grandchildren, you've got 2 daughters, you've got wonderful family. Why did you want to come back and go through this terrible process we have in Washington of getting things through consensus and getting people to agree to what you want to do?
Because I want those grandchildren to have a future. It's very simple.
So it's going higher, so your entry point is going to be higher. So you can move the whole box up, waiting to pull the trigger, and just adjust your stop loss, of course. So go to the next flat kg line.
Most of the emissions that are going
and again the TP as well.
the atmosphere and are creating this increased level of energy that
Everything can be adjusted. Still looking at 15.
floods, the rain, all of it is explainable, and it's all linked.
RSI 72. See how it crossed into the zone, look aggressive, and then secondary trade didn't bounce back into it, so you wouldn't have done anything here. You could have got in once price broke the line again here, look, retested it, but you'd have gone into some drawdown. You might have panicked, got out of the trade. So especially to take the entries on the RSI and then wait.
market narrative shifted a bit, and that lower vol regime is positive for risk assets. And especially it's more positive when sentiment had gotten so far offside. So there was a massive swing in sentiment. I think that coupled with that perception that the Fed became a bit more perhaps dovish led to the rally that we've seen.
That was Lisa Hornby. Schroeder's always great to catch up with Lisa about 15 minutes.
But like with those opens, sort of just saying, you know, the reason I took the sales was that we had the trend bars were red, so I'm looking to enter not necessarily a red candle, but really when I see signs of it pushing up, I'm going to sell at the top. I try to avoid trying to sell at the bottom, because this is what can happen. You get this candle. Now this could come back down, but now is where I'd be looking to take a sell again if I saw the RSI dipping down. So on the open, I'm looking for a, you know, the two trend bars. One's a short term and one's a longer term, to combine together to give me an edge of where I'm going, and then I'll wait for the candle to flash green or be green or push up, and then I'll take the sell. So even if it's not a true sell trend, the candle usually will come back and fill your order, and that's kind of how I do it. And relies, you know, probably where that spike was, 3 or 4 positions in and out as soon as I'm getting kind of like 5 to 10 pips per entry. It's quick, but that's how I teach it, but that's what you've got to do, because you're on the open. You don't want to be hanging around waiting too long, because prices can flip both ways, as we're seeing now. But you need an edge to tell you what direction possibly it's going to go in, and it's pretty profitable going that way, as long as, like I say, you try and enter at the top or the bottom of the candle opposite to what the trend is. That's what I always try and do on opens. And you know, so that was an easy kind of win on that. And on US-30, as you can see on the open, when it got there, look, it was green and green again. So again, if you'd been watching this, you could have gone for the buy almost straight away, just gone in on that, watched the price just shoot up, because everything was sync green again. Pound dollar, look, on cable, it was mixed, but the longer term trade was to the top side and RSI was green, so that would give me enough again to say I'm going for a buy. You know, even on DAX, look, again DAX was mixed up, because again you had green but RSI was red, so I left that one alone. And you don't want to be trading DAX on US Open necessarily anyway.
That's the bond market. Let's talk about 13Fs. The latest
and gold again, we were green on the open, and we were at red candle anyway. So again, we were in the neutral zone. We're above that 40, so you could have gone for that buy and got out as it hit the supply zone. Look, so again, that was a fairly easy one if you wanted to trade gold. I usually try and trade the indices on the opens because they move a bit smoother, easier to decipher a move. Like I say, US-30, look, if we get across into our neutral zone, we can look to take a quick scalp sell.
Probably the most awaited filings each quarter.
I'm just waiting for the cable setup.
Warren Buffett's firm. You can see that they continue to buy. Now, in 2008, Warren Buffett said that when others are fearful, that is the time to be greedy, and when others are greedy, that's the time to be fearful. Well, there was a fair amount of fear in this last quarter, John. You can see that Warren Buffett's Berkshire Hathaway loaded up on Occidental Petroleum. There's some thought that the position was so
doing its best, look.
In fact, at some point, buy out that company. Ally Financial, Activision, Apple, and then more broadly, this is very interesting because, of course, it's this difficult year, this debate of whether or not we're still in a bear market. Well, the sectors that were most bought: healthcare, consumer staples, energy, and utilities. 3 of those 4 sectors, John, as you know, are defensive sectors. The only 2 sectors this year that are higher: energy.
Again, it's risky because you've got 2 trend bars green. RSI hasn't hit that neutral zone, you see. So you get the rejection off what the center, the golden zone off the Fibonacci. So again, no surprise there. If you're taking a sell there, look, you'd be stopping yourself out.
Yeah, it's interesting. I think
NAS is breaking, brilliant. It's breaking lower, it's broke that zone.
What these big investors did. A lot of these investors, as you
going
know,
down
have these
even
big
more.
personalities. So it's curious to see what are they doing. That said, some of these stocks, when the report comes out in terms of a big position taken, especially a new position or a big ad, you'll see those stocks do very well because retail investors want to pile in, and I suspect maybe some of the smaller institutional investors as well.
Abby, thank you. Less conflicted, more diplomatic than me about 13F filings. 20 minutes
Brilliant. And we've got another $10 on that. We just jumped in. It was nice. A bonus trade. Again, that's pushing down further. We've got red. I have to watch out because we're well oversold. Look, we're at RSI 18. That's why I'm not hanging around. But a quick $10, that will do.
Good morning, John. Yeah, we got some news from CBS that this judge is going to have a hearing at 1 p.m. on Thursday, so 2 days from now, about what is going on in terms of the former president's case. Now, what we heard from the Justice Department overnight, there's a lot of questions regarding the affidavit. Should they or should they not release the affidavit the same way they released the warrant? And what the Justice Department said is that they do not want to go ahead with releasing the affidavit because they believe this could be potentially an issue with witnesses in terms of the investigation, and they don't think it is safe at this moment to do so.
So there you go, pound dollar. Look, we're almost ready to pull the trigger on our trade.
Is that it really is up to the judge in whether or not they want to release that affidavit. It's a very unprecedented time, and there's been a number of conservative groups and media groups who have asked, given the fact that this is very unprecedented,
risking 20 pips. There we go. That's about right. That's what I want to be doing.
On why there was this raid in Mar-a-Lago and potentially why the former president had these 11 sets of
RSI is now overbought. 78. This is where I'd usually go in for a buy, extra buy. So, like I say, my strategy, I'm just waiting for another 6-7 minutes for this to finish its run, and then I'm going to look to take the sells on this and see if price is going to come back to our baseline. Look, see.
The Department of Justice, the FBI, these are independent institutions, and they are really making sure they are careful in terms
and then we'll end the stream, and we've had a good, successful trading session again.
Good to catch up, as always. MH with the latest down in DC. I know you're all following that story. When we get some headlines on it, I'll bring them to you. Or rather, Anne-Marie down in Washington, DC will bring them to you. No doubt through the day, keeping you up to speed on Bloomberg TV and on Bloomberg Radio. Coming up, the market moving events you need to be watching. Your trading diary is coming up next. On the horizon, some Fed minutes and US retail sales. We'll break it down for you next.
Fed minutes tomorrow, yes. So we can look at that. That's going to be good. Retail sales, and then the Fed minutes to scalp on gold and gas and oil. So another good stream we should be able to do tomorrow. So that's why I jumped in on NAS. Look, quick in and out, because look how it pulls back, because you're oversold. You know, we're waiting now for a pull back. You can see the level there. Pull that down and see it rejects off that level. Bang. Again, you're not taking a buy until the RSI clips into that neutral zone, so you got a bit of a wait on that one. US-30, see, look.
Okay, so you're moving in.
Sell hasn't happened yet. I remember you can always use the SAR dots. Look, they're green. You want to see a red dot appear on the top to even think about potential sell, and then if it does, you know, look where the green dot is right here. It's telling you that you know no sell is until it crosses this dot here. So we are well away. It's just telling us it says in a range. Basically, we know that we're scalping ranges here. You know. We're not scalping any trend, there isn't one at the moment. But that's the idea about true scalping. Is where everybody else is waiting to take a trade all day. We've already done best part of 20 trades since the open. Yep, since that news, well, since the open we've done about 25 trades. We're well in profit, so added to what we already won this morning. So this is the way, if you don't want to wait, but you've got to know what you're doing and you've got to be careful of the risk.
Even if
So it's all waiting for now. There's our cable setup, and you could set your TP at that level there. Look at the old Asian line. Imagine you're going to get yourself 8 pips. So
4.5 to 5% in my view to really push inflation towards 2. If that doesn't happen, inflation expectation are going to get unhinged. Or if that
but again, I'm going to move the whole thing because obviously I'm going to be entering up here in the next 5 minutes or so.
It's one way or the other. That's your dose of gloom from Nuria.
So then look at that, it syncs perfectly with the Asian line. 25 pips.
It's not mine necessarily. Futures were negative going into the opening bow, coming out the other side of the open about 25 minutes into the session.
And you stop loss, look at that, it's going to be perfect.
On the S&P, we're down 0.6% on
Yeah,
the
kind of there, look,
NAS-100.
just
Keep an eye
above.
on what's happening in the bond market.
Give yourself a bit of air. So it's a 1-to-1 ratio trade basically. That's pretty good. That's what I like.
21. That's the price action. Here's your trading diary. President Biden signing the Inflation Reduction Act at 3:30 Eastern. US retail sales and Fed minutes coming up tomorrow, plus retail earnings continue to roll in. Lowe's, Target and TJX on deck. The Fed's Esther George and Neil Kashkari speaking on Thursday, followed by existing home sales and another round.
We'll see if we can get 10 pips on this trade. So good luck on this one, on the cable trade. We'll let that one run and we'll share all our results in our trading group. Right, well, we've been going 90 minutes or so yeah, that's our final trade. We're setting up for sales on cable. NAS, we're going to be looking for a pullback buy, and US-30 again is steaming away. Look at that, beautiful. Again, we're synced. So again, no sells on that. This is a good thing. The indicators just stop you taking what you think you want. I mean, we wanted a nice little pullback sell there. It's not there. It's increasing. We can just look left and check a level. So our fib is our level now. You can go to a higher time frame, of course. I'd rather keep it all on the one and focus on that. So again, you don't want to be doing any sales till RSI is back inside the neutral and you've got one of your trend bars red. There we go, you've got 2 minutes to go.
Have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing.
We'll let those positions fly.
Startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflect.
So thanks again for joining me. Again for watching, and join me tomorrow for another live stream for true scalping. And we'll see how our cable trade goes. One quick final look. So NAS, yeah, we're looking to take buys on NAS. We're looking for sells on US-30. Now we've reached a peak, you see. We've broken our supply and demand, so we're looking for a sell on that. And obviously we're looking for sells on cable as well, back to probably around our Asian line. So yeah, good luck everybody. There's no more news till later on. Like I say, thank you for joining me. Happy true scalping, and see you on tomorrow's live stream. Take care.